Today's video is one of the most important videos we have ever filmed on this channel, discussing massive topics such as the bull market uptrend. Will Bitcoin correct lower? Are the bears going to run out of steam? Why is Bitcoin correcting when the stock market is rallying to new highs? And what can we expect for the altcoin market? This is a video you don't want to miss. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the total market cap, the altcoin market cap, Bitcoin's high time frame charts, and the short-term price action, leaving absolutely no stone unturned, going over exactly what has happened, what is happening, and what you should be expecting moving forward. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, join us in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. We also have our group chats, our general chat, trading chart, education chat, news, help, daily video, and trade setup chat with over 700 members. This is a place to be. Again, the VIP channel has been operating since February 2021, and you can find out more information by clicking the pinned comment in the free channel, my name over here to contact me, and the information via these links right over here. Thanks for listening to that, and let's get into a video. So, as we can see, guys, the past 24 hours have been a very turbulent 24 hours. Bitcoin, as a consequence of failing to break over that critical resistance level at 63.4k, which in the past resulted in a strong rally to the range high, and when we broke down, resulting in a strong retest of the range low, we have seen a failure to get past that level, and thus a rejection back into that $60,000 region, as well as underneath that 4-week-long downtrending resistance. We have a lot to discuss today, guys, so we're going to keep the intro brief and jump into the market data. Taking a look at the market data, 24-hour volume is up 57% at 129 billion. 24-hour liquidations up 228% at 208 million. Of the 208 million in liquidations, 185 million have come from long positions and 22 million have come from short positions. Again, a testament to the fact that we've seen such a large rejection and correction for Bitcoin in the past 24 hours. The DXY is continuing downwards upon some pretty bearish economic news. Now, we do have some new economic news coming out, I think actually tomorrow, which is going to be, very importantly, FOMC minute meeting, which is super important. And then we have got our NFP data and our unemployment rate data, both leading indicators for developing inflation. Again, can play a massive role in impacting where the DXY is going to go. As of right now, the DXY is sitting underneath that 8-month-long downtrend. Again, this 8-month-long downtrend we have here originated at the same date of which Bitcoin entered its 8-month-long uptrend, which is representative of this bull market uptrend. So we've still got that inverse correlation between these markets over here to validate we are in an uptrend for Bitcoin. Again, we're going into that danger zone, which we'll discuss in today's video, but still, the trend is your friend until it ends. The S&P 500 has been absolutely soaring, leaving cryptocurrency in the freaking dust, and we'll talk about that in just a moment too. As we can see over here, guys, we are expecting continuations to that $6,000 region on the macro, provided our prior high is able to sustain. Meaning if we break below 5,300, that would be the sign of a macro reversal, as for the first time since we've started this uptrend from those lows, creating those higher lows this entire way up, we have not seen any structural breaks, meaning prior high points, okay, have not been lost in this rally toward the upside. We have sustained above all of of these prior highs as we have continued upwards, again suggesting we're developing support as we continue higher and developing strength. Now, a lot of people are probably wondering, well guys, why is Bitcoin getting absolutely hammered and the stock market rising? And this is when it's so important to understand how correlations work between different asset markets and what moves price in general. So some of the main movers of price, when price is basically determined by perceived systematic risk, what is the perception of risk in the market at any particular time, perceived systematic risk or systematic risk being elements of risk that are uncontrollable by investors, yourself as someone in the market, a market participant. So interest rates, inflation, taxation policy, economic policy, governmental policy, and societal perspective play a massive role in influencing systematic risk and thus people's decisions within a market to allow that market to continue higher and continue to buy or lower and continue to sell. When we're looking at assets such as crypto and stocks, both of these assets are correlated to a positive correlation of 0.7 on the macro. So 70% of the time we see them moving in the same general direction. 30% of the time we don't. The reason there is variation is because some of these factors on the right can be industry specific, meaning only impact crypto or only impact stocks. And therefore we do see deviation or periods of inverse correlation between these generally correlated assets. And that is what we are seeing right now. However, when we deduce and break down the list of potential influences of which is pushing cryptocurrency down, we can eliminate a lot of these factors. We have societal perspective, which could be one. If we do take a look at something like overall interest in regards to click rates on Bitcoin search terms, we can see the interest in cryptocurrency is at basically all-time lows, the same time we saw at the bottom for Bitcoin. So we do have societal perspective being very, very low. And as we know, emotions is a key driver of price action for assets, particularly risk asset markets and speculative assets. So when we have low societal perspective, we do have this position of which we will see less growth. Now, there are other elements that can push the price down, but as we can see, if the DXY is moving generally downwards, we will generally see both these asset classes move upwards, as again, they are valued against the US dollar. So when US dollar moves down, these assets move upwards. So why is cryptocurrency moving down exclusively and stocks moving up exclusively when we have realized that the elements of systematic risk that influence the inverse correlation between these assets are not impacting? Well, then we have to look externally. What are potential external yet exclusive events that are occurring exclusively to cryptocurrency that could reduce the price of the asset? Mt. Gox, German selling, those are two potential scenarios. But there could be other scenarios behind closed doors that we are not aware of the public, and that is very likely what is happening. It's very likely something is occurring or brewing behind the scenes, which is pushing Bitcoin and cryptocurrency down that we are not aware of. The reason I say that is, again, all of the systematic risk triggers that would generally facilitate the asset markets to rise are there. We are seeing inflation come down. We are moving towards an interest rate reduction. We are seeing that positive impact on the stock market, but not cryptocurrency. So we know there's an industry exclusive aspect that is impacting crypto, but we don't know explicitly what that is. We do not have that public information. We can only speculate. Something to think about when you lay in bed tonight and ponder why cryptocurrency is wrecked. Okay, let's move over to the broader analysis and jump into Bitcoin. A quick word from today's video sponsor before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay team, let's go ahead and get into it. Sorry it took a while to get into the Bitcoin analysis today, but a lot of what we talked about at the start, although maybe quite boring to some people, everyone sort of knows where Bitcoin's going, is super important in developing your understanding of the markets and your ability to project where the price is likely to go next. So let's jump into the weekly chart. What we can see here is that most important level That bull market uptrend, that uptrend you see right over here is intact. We are sitting above the bull market uptrend, as well as the 200 SMA, which is this blue line. As you can see, we developed that uptrend around which we broke above the 200 SMA. We've been above the 200 SMA ever since, and above the uptrend ever since. The distance between the SMA and the price action is a representation of volatility. So as we start to move closer and closer, it is a representation of decreasing bullish volatility, or otherly known as decreasing bullish strength. However, we are remaining in an uptrend while this level does hold. We are currently in this green zone, which I would like to call the danger zone. The danger zone is the region of which 60,000 and this macro uptrend coincides and eventually crosses over. The crossover dates are as follows: the 22nd of July for 60,000, meaning the bull market uptrend will cross 60,000 on the 22nd of July and cross 61,000 on the 30th of July. Therefore, this month is going to be massively important in determining whether we're going to see a breakdown or that continuation upwards. We're going to find out before or during these dates at the latest. If we do zoom out, I do want to go ahead and note, we can see our RSI over here, and we have lined up our RSI pivots with the trend line pivots. So we've got our pivot 1, our pivot 2, these line up with the trend line. What we saw over here was increasing price action, decreasing RSI. What is that? Everyone knows what that is. There's a hidden bullish divergence. That is representative of absorption. It is telling us that the buyers are stepping in and pushing the price up. We have overall strength. What are we seeing over here? We have that downtrend extending. We could potentially see one more correction for Bitcoin to retest that trend line before we push back upwards. That is definitely something that is on the cards. And again, while we remain above that trend line, we always have the possibility to come back down to retest or even see a liquidity grab below that trend line before moving upwards, which would facilitate a retest of that RSI. We'll have to get into that in a short-term analysis in just a moment to talk about the likelihood of actually seeing that. But from a macro view, there is a possibility that we see one more correction into this weekly uptrend, this monthly uptrend, sorry. And with that, we see that RSI create again a retest on that low, indicating once more we have higher highs, or should I say higher lows on the trend line and lower lows on the RSI, representative of a high time frame uptrend and high time frame absorption. So let's now break it down even further and jump down to one more chart on the weekly and then jump into the short term. So there is one chart on the weekly I want to discuss, which is relatively concerning, I will say the least. Relatively concerning. This is going to be our weekly candle, and we have 4 days remaining on the weekly. What we can see here is with that respective uptrend we've been talking about for cryptocurrency, that bull market uptrend is around about this level over here. We do have a broader uptrend, which is going to be from our absolute bottom to the start of the bull run, and we extend that one across. What we can see, again, these pivot points line up with the pivot points on the price action. Pivot points are simply the candlesticks of which reverse the trend. That is basically a pivot point. What we can see here is the RSI is breaking down from that respective RSI uptrend, which could result in a correction all the way down to retest that overall trend line. This, of course, is a very bad thing, and we should be very much aware of that RSI, particularly in the weekly close. A breakdown of the RSI is irrelevant until we see the close of the RSI. So right now, if we see a strong weekly, we could see this trend line push back upwards, and it would completely eradicate this RSI below the trend line. It wouldn't even exist. It just go back upwards. So until we get that weekly close, this RSI is not going to lock in below the trend line. Therefore, it is only a warning sign for now, but it is definitely a warning sign you need to be paying attention to. Let's now move over to the short term. So what we can see here, this is going to be our high time frame range, the range of which Bitcoin has been in for bloody 4 months now. Absolutely insane stuff. Let's just talk about the bearish case scenario to get it out of the way with, and then jump into everything else. The bearish case scenario, simply put, is going to be a breakdown of the uptrend, a breakdown of the 200 SMA, a breakdown of the 60k support, which will result in a loss of the range low, and therefore we will likely see a correction to 52. 52 being the first area of support, okay, below the current $60,000 support. So we can see the VRPV significantly drops off within this region, telling us that we would expect to see increased volatility if we were to break below this level of support. Now, a break below this level of support will require a loss of our sell side liquidity on 58k. Now, if we line up our uptrend, 58k is going to be just within this danger zone, okay? Now, that could result in a liquidity grab into our prior sell side liquidity, which has been untapped, by the way. Untapped sell side liquidity at 56.5. Looking at our uptrend, 56.5 is sitting slightly below. So that could be that liquidity grab into 56.5 before we continue back upwards. That would facilitate the RSI retest and continuation. That is a real possibility. Again, for this possibility to play out, something like that, okay, for that possibility to play out, or maybe not that deep, something like that maybe, we would have to see a loss of 58.4. A loss of 58.4 would initiate a move toward 56.6, and that is where we're going to see the mass liquidation occur for Bitcoin, and then we're going to either see the price stabilize and reverse, pushing back into the trend lines, or break down and officially close under and see that continuation to 52k. Either way, that is the bearish case scenario. The bullish case scenario is only back in play when Bitcoin is able to reclaim and break back over that 63.4k region. Once again, historically, what we have seen, a break of 63.4k, we see these continuations to range high. So we want to see a break over that prior resistance. A break over this level of resistance over here would basically almost guarantee, as close as you can get to in the financial market, a swing at least to 67,000, which is the midline resistance of the channel, or if we break higher, to the range high. Very, very bullish stuff if we see that. Until then, we are at risk of continuations lower. That is the daily, that is the weekly, that is the hourly. Let's now jump down to the immediate price action and talk about what is happening for Bitcoin. So, as we can see over here, let's just delete everything off the chart. To make this very simple, we're going to go ahead and chuck in that level of resistance right over here. So we can see that resistance. Let's go ahead and just change that to a red. Perfect. That is our resistance. We have got our sell side liquidity. Let's go ahead and chuck that one in. We have got our current range low, which we are kind of consolidating around. We'll go ahead and throw this region in right over here. We can see we bounce just underneath that region. This is kind of the levels we are looking at right over here. As you can see, guys, on the right-hand side, our VRPV significantly drops off. Oh, much bigger pen than we expected. We expected to use the brush. Anyway, the VRPV significantly drops off to 58. So this is going to be a potential target for Bitcoin if we do drop any lower over here. That is what I'd be watching out for. On the flip side, toward the upside again, we are looking at our prior lows. So we're looking at this level over here, 60,600. A reclaim of this level could send Bitcoin back into a uptrend. This middle point, this point right over here, which is going to be between, let's go ahead and brush it out, between that prior low and our low before we saw that continuation is going to be the danger zone, okay? The danger zone on the short term, the decision zone. The directional break of the high over here will result in continuations, and the low over here will result in continuations. This is a decision zone. As we can see on the short term, if we zoom in even smaller, we can see that Bitcoin is starting to show signs of bearish exhaustion, okay? We are starting to compress closer and closer to the 50 EMA. If we bring up our Let's just bring up our RSI. I guarantee you we're going to see some sort of bullish divergence over here. There it is. We can see some degree of bullish divergence forming again with our lower lows on the price action. And we have got those higher lows on the RSI indicative of absorption, indicative of the price action potentially moving back higher, and most importantly, indicative that the buyers are starting to step back in around this 60k region, as we have seen for the last 8 months, 60k being defended. So we're not quite out of the woods yet on the short term. There is a possibility we continue lower, but we are starting to consolidate sideways, and we do have a possibility to move back upwards. We just need to validate those short-term trigger points. All in all, not looking horrible for Bitcoin because we are still at support, but not looking amazing because we haven't really got any signs of bullish validation on the short term to continue higher. There's a lot of risk in the market right now, and you have to be aware of all of these potential elements. Let's now move over to the total market caps. The total 2 market cap is in a tricky spot, but it is still at support. Again, support is support until it is not. This weekly candle is going to be very important for the entirety of the crypto space, total, Bitcoin, etc., etc. Because these are going to create either new weekly lows on the weekly candle. We look at this weekly candle, we are engulfing that prior candle, right? We are dropping below the low of that prior candle. We can see, so we definitely need to actually get above over here, or we potentially break down of that range, right? Not a very fantastic sign, a pretty big sign of weakness. We will need to break back above that 2.2 trillion on the weekly to really show that this area is being defended quite strongly. If we close within this level, within the support level, we are seeing some signs of weakness over here initially. Not enough to validate we're going to go lower, but enough to really open up the possibility for that correction for the total. And again, if we see that correction on total, we're looking at the region, okay, around this 1.6 trillion to 1.62 trillion. This region over here would be that target if we were to see that continuation lower. Again, definitely don't want to see that. Ideally, we would like to see a bounce from here. But again, that is going to be a possibility if we do lose that level. Once more, we are bullish above and bearish below. Moving over to the total 3, looking pretty grim. Again, altcoins are getting hammered as always. We have a few important levels to watch out for. First and foremost is the uptrend represented by the trend line. Loss of this level, we will very much likely see a correction to 4.7 billion, okay? If we lose 4.7 billion, altcoins die, okay? Below here, altcoins are literally dead, okay? I've got nothing to say, besides you would definitely not want to be holding altcoins if we lose that $4.6 billion level. It's going to be absolute blood on the streets, okay? This is essentially the last potential correction we could see for altcoins that would still have some hope on the high time frame for recovery. If we lose that level, it is not looking good at all. So let's move over to the trend lines. We sustain above here, we're good, we're continuing upwards, right? The trend line is your friend to an end. This is the 8-month-long trend line. This is the bull market for altcoins, essentially. We have got our downtrend on RSI, we've got our deviation range, we've got our continuation high range. So let's take a look at the RSI. A break into this deviation range will be a potential buying zone, okay? If we break the trend line, we are flipping a bullish trend, and if we break the range high, the clear this high, we get a macro continuation for altcoins. That is it, guys. Thank you for watching. Have a fantastic day. Catch you guys in the next video tomorrow. See you then. Bye.